Bitcoin to listen.
Bitcoin started the week trading around $105,000 after one of the largest liquidations in recent crypto history. In just a few hours, nearly $20 billion disappeared from the market. For many investors, it looked like the beginning of a new bear market. But what really happened goes far beyond a simple technical correction. On Friday, just after 5 p.m., when the stock exchanges were already closed, former President Donald Trump made a public statement saying that the United States would impose 100% tariffs on Chinese products. And that's where everything changed. While traditional markets were asleep, Bitcoin stayed awake. It's the only major asset on the planet that never closes. 24 hours a day, 7 days a week, no weekends, no breaks. As soon as the announcement was made, the Bitcoin price plunged. Thousands of investors had automatic sell orders, the so-called stop losses, that began triggering in a chain reaction. The result was a sharp and widespread drop, accelerated by algorithms and trading bots reacting in milliseconds. While most people watched their charts collapse, a single whale, a massive investor, had bet exactly on the drop and made hundreds of millions of dollars. A few hours later, Trump stepped back, saying the tariffs would be reviewed. But the damage was already done. This episode highlights a key difference between Bitcoin and any other asset. It never sleeps. That's why political and geopolitical reactions can hit the crypto market instantly, while the rest of the world is still offline. But what now? What does this drop really mean for long-term investors? According to recent on-chain analysis, this 20% correction still looks like a natural movement within a bullish cycle that began months ago. The key support lies between $95,000 and $100,000, the so-called defense zone. As long as Bitcoin stays above that range, the bullish scenario remains intact. Technical data shows that most short-term investors are now operating at a loss, something common in moments of extreme fear. Historically, these moments often mark local bottoms in the market. The derivatives funding rate is also negative, a signal that in previous cycles marked ideal buying opportunities. In the macroeconomic context, the signs are also positive. The US market is pricing in interest rate cuts by the end of the year. Global liquidity is increasing, and gold has just reached a new all-time high, an indicator of fear, but also of a search for safe haven assets. And whenever gold rises, Bitcoin tends to follow. In addition, the Federal Reserve has signaled the end of the monetary tightening phase, which means more money flowing through the global economy. Combining all these factors, there's a real chance that Bitcoin could still reach new highs, possibly in the range of $130,000 to $140,000 by the end of the year. But pay attention, if the 95,000 zone is lost, a deeper correction could happen, possibly between $81,000 and $55,000. A less likely scenario, but one that can't be ignored. Overall, the current moment is a turning point. Investors who understand what's happening now may reap solid rewards in the months ahead. Those who react with fear may end up regretting it later. This was Bitcoin to Listen.
Bitcoin to listen.
Clean information, no hype. For those who want to understand the market without staring at a screen. Remember, this is not financial advice. Every decision is yours, based on your research and your tolerance for risk. See you in the next episode.
Bitcoin to listen.